Hi, everyone. So next, I want to go through the Blockcircle momentum trading engine, and I want to go through it step by step and give you some background, some context for it. So right now, we have Blockcircle momentum trading engine version 1, and then we just deployed and pushed live version 2 for beta testing. And what it is, in simple terms, it is a full-fledged, fully configurable, fully programmable trading engine. So it's not a trading bot, it's a trading engine that helps you come up with trading strategies that you are able to forward test that seem to be promising based upon some back testing that you've done. So an attractive trading strategy, for example, that you can configure and back test is one that is very profitable, one that has at least 30 to 40 to 50 trades, that covers a total time period of around 3 to 6 months minimum, ideally. Percent profitability in terms of an actual win rate. So how often is the trading strategy accurate and how often does it win? Above 60, ideally. And then a profit factor of above 1, of course. Drawdown with no leverage to be ideally below 40. And drawdown in this particular context is an unrealized loss. So it's not an actualized loss, it's an unrealized loss. It's just the amount of capital that you had in this trading strategy that you experienced a drawdown. So if you're at your absolute peak at 100,000 is what your total cumulative balance is, and you bring that down to 65,000, then your drawdown is 35,000. So it's around 35%. That's what your actual peak to trough drawdown would be. And then your average trade is what your average trade profitability would be. And ideally, you want that to be above like 3.5%, 4%. So the goal would be to try to find a strategy which outperforms buy and hold. That's the entire premise of it. And we have it in TradingView. And if you look at the strategy tester, this literally gives you all of the quantitative metrics that I think you would even possibly need to have. So this one trading strategy that we've determined works tremendously well, and we've been actively trading and forward testing for more than a year now, is for Solana USDT on the 12-hour on Binance. You don't have to use Binance. And it's using Momentum Trading Engine version 1. And if you look at the strategy tester, it walks you through and shows you every single metric that is useful, right? So it allows you to be able to look at the net profit. So this trading strategy gives you a net profit of 5,500%. And we'll go through each of these in detail. But for now, I just want to walk through the basic steps of how to actually get started, where to find it, and how to get your configuration up and running quickly. So the first thing to do is, how do you actually find it? So what you do is you go into TradingView and you click indicators. You go to your invite only section, scroll down, and you should be able to see Blockcircle Momentum Trading Engine version 1 or version 2. So the difference is each of these are using a different methodology and they have different functionality. Version 2 is considerably more sophisticated. So I would definitely be focusing my time on testing configurations and strategies using version 2. But version 1 still has some promising configurations that we're testing. And that's why we've decided to keep it there, of course. So think of it as the equivalent of Uniswap version 2 versus Uniswap version 3. Both are smart contracts that are deployed to the blockchain, and they're both still being actively used. They're still being globally adopted. So that's exactly how I feel is like a good metaphor for this. So all you do is you click it, and then when you click it, it'll be added to your chart. And then once it's added to your chart, you'll be able to see, you'll see every single long and short. So what you can do, and what I like to do, is just double click it, go to style, and then uncheck quantity, and then that just clears up the chart quite a bit. And really what you would do to be able to configure it is by going to the inputs tab, and there's really 4 steps. So for version 1 and version 2, there's really 4 steps. Step number one is you want to set what your time period is for a back test. So do you want it to start from January of 2023, or would you like for it to start from January 2022? Or do you want it to start for only the last 3 months? So your goal is to try to find what a sufficiently acceptable backtesting time period is. So for me personally, it would be at least 6 months, because that really covers the depth and breadth of a sufficiently proven, stress-tested trading strategy in crypto, because that more or less covers like the entirety of at minimum a mini cycle. Right? That's how I view it. And that's step one. So it's step one, choose your time period. Step two is, what are your entry conditions? How would you like the trading engine to open a trade, either a long or a short? What conditions need to be met? What criteria needs to be met? What needs to be triggered for a trade to be opened? And there's 4 types of trades. There's a long entry, a long exit, a short entry, and a short exit. So for us, in version 1, it's everything is momentum based, but one of the main conditions is whether or not you want to be using the Blockcircle momentum entry condition. So whether or not you want to be looking at the CCI, so the commodity channel index, or you want to look at a stacked moving average called T3, whether or not you want to modify the B period, what type of threshold do you want it to take into consideration when you're looking at the momentum? Do you want it to be looking at 10% greater than the prior candle, or do you want it to be 20%? So how selective and exclusive do you want to be? Do you want to look at higher time frame confirmations? And this allows you to configure it for 1 day, 3 day, 1 week, etc. So this is just one huge entry condition. Another entry condition is your Heikin-Ashi indicator. And another condition is your exponential moving average. So, and we'll go through these in detail with version 2, because there's many more entry conditions. I just want to show you the basic premise of the configuration. So then step 3. Step 3 is when you get into the exit conditions. So how do you want the trade to exit once you are actually in a trade? Do you want it to trigger a stop loss? Do you want it to exit by target profit? Do you want to have enabling trailing stop losses, etc.? Or do you want to have any form of invalidation? And then step 4, the 4th step, is general properties. So this basically allows you to configure if you want it to only be going long, or do you want to do shorts, or do you want to have limit orders, etc. And then the last, within the general properties, you can also configure the alert messages. What do you want it to say exactly when an alert is triggered when there's a long trade? Do you want it to say long entry? Do you want it to say short entry? Do you want it to be in a JSON formatted message that you then publish through a webhook to one of the trade execution services like 3 Commas or Cornix or Mizar or your own in-house app? So it's completely configurable in that way, and it's natively compatible with all of those robotics automation tools that are available. And that's really the configuration for version 1. And from now on, I think what we can do is let's focus on the actual strategy tester. So let's take a look at this strategy. So if I click this button here, this allows me to maximize it. So if I go down, I click strategy tester, then I can click this maximize button, and this allows me to see the entire performance of this strategy. It's for Solana USDT on a 12-hour basis. So it's trying to read and assess momentum on a 12-hour basis with a 1-day higher time frame confirmation. So it's adjusting every 12 hours and adjusting again every day to see whether or not momentum has in fact fundamentally shifted from a downtrend to an uptrend, or from an uptrend to a downtrend, vice versa. The whole premise of this training engine is for it to perform irrespective of market conditions. So it shouldn't make any difference if we are in a bull up only market or in a bear down only market. It should work irrespective of market conditions, and the market conditions should be inconsequential with the trading strategy. That's the whole premise. That's the basis of it. And it takes a long time trying to find trading strategies that work over a long period of time. So that's why I think we're very proud and very happy of the configuration that we found. And the way we did it was in Blockcircle, in the alpha community, we have a dedicated channel called Momentum Trading Engine. And this Momentum Trading Engine channel is where we leverage the collective intelligence of the entire group. And think of it as like a unified brain trust. And everyone just contributes ideas and brainstorms different concepts and different configurations that we want to continue to backtest and then forward test if they're really promising. And that's how we came up with this configuration through hundreds of iterations. So this one basically gives you a return of 5,000%. So this is basically a 55x in current, right up to today, which is July 11th. But at its peak, it was at an 83x. And this is in green, in the green line chart. But then when you look at the buy and hold equity in the blue line chart, Solana was one of the highest, if not the highest performing asset. That's a top 5 most traded, globally accessible, highly liquid cryptocurrency. And it did remarkably well, right? So if you bought and held Solana from back in January of 2023 until now, you've done very well, right? You've done a good like 10 plus X. But would you rather have 10x or would you rather have 80x, right? I mean, those are the questions. But more importantly, the buy and hold drawdown was well over 75 to 80% versus the buy and hold drawdown of this was 50%. And it was even lower before. So those are important points of consideration, right? So again, the drawdown is your unrealized loss, right? And the run up is conversely your unrealized gain for an open trade. So you haven't actually, in fact, fallen below your starting balance. So our starting balance in this case, if you look at properties, is 10,000. And our order size, I put it at 200%, which is the equivalent of 2x leverage. And you can adjust this. You can adjust everything you can imagine you would want to. So commission, for example, it's 0.03%. So I'm using this as total equivalent of a total transaction cost. It's a placeholder that encompasses processing fees, encompasses like your maker and taker fee, it encompasses funding rate. It also encompasses your slippage. So if you're experiencing significant slippage for a liquid coin, I'm covering that in commission. So obviously this is a tad bit low. So you would increase this to 0.2, 0.3%, depending on the order book depth and whether or not you're trading a liquid or illiquid coin, of course. And then pyramiding is interesting because pyramiding, I set it to 1, but pyramiding allows you to do multiple successive entries in the same direction if you want. And right now, I don't think we need that. I've just set up the margin for long and short at 20%. And there's other things around, recalculating and refilling based upon candle close that you can do. This is more advanced. All of this is quite advanced, but this is even more advanced. I don't think it's even worth tinkering with unless you're very comfortable with building strategies and you have some experience with quantitative algorithmic trading bots. This has taken us years to build. There's thousands of lines of code. We're proud of what we've done. So that's how you set it up. That's how it explains the net profit. It's got 68 closed trades. It's won 70% of the time. This was up to 85% for a long time. And only recently we've sort of been in this choppy, unpredictable time, in the last several months here. But more importantly, let's look at the performance summary. So what this is showing you is that this is performing much better for longs than it does for shorts, because by a factor of at least almost 3, because the longs are giving you 9,200%, while the shorts are actually losing you 4,100%. So this is just a gross, aggregate, right? But it's looking at the gross profit and then minus the gross loss, and that's how you get to your net profit. So the max run up is remember, it's what I explained before, which is, and this is how you can get a definition for every single field. It gives you the exact formula, but think of it as just an unrealized gain. That's as simple as that. And then the max drawdown we talked about. The buy and hold return is what we talked about, which was the blue line in the chart. And this is if you had bought and held Solana starting with the first initial trade that was executed back in January, then what would your performance be? And our goal, that's to me is a realistic benchmark. Your goal in this market, and is what we always talk about in Blockcircle, is you want to outperform a beta. And a beta for us is you buying and holding Bitcoin, Ethereum, Doge, and Solana. Those are the four, pillars of a buy and hold strategy. So if you have no other inclination or interest in having any exposure to cryptocurrency, buying and holding, 25% of your portfolio in each of those four assets would not be the worst decision in the world. It would at least give you some strong composite direct exposure to high performing assets that each have their own investment narrative attached to it, right? So I really want to outperform this. That's our goal. By any means necessary, we need to outperform that. And then you have your Sharpe ratio, you have your Sortino ratio, you have all of the different quantitative metrics and assets you're looking for. But the ones that I like to focus on is the number of winning trades. So that's determined by how many times you'd make at least some percent of profit divided by your closed trades, right? That shows you the amount of times that we're profitable. But the ones I like even more than that is the average trade. So on average, we make 5.39%. On average of those winning trades, we make 9.75%. On average for those losing trades, we make 6.7%. And you could see whether or not is it more advantageous to go long biased or is it more advantageous to be short biased? It's very important to have that delineation. And then that helps gauge whether or not you want to exit more aggressively or more conservatively, depending on the strategy. And then you have the ratio of wins divided by losses. You have, which of course coincides with your win rate. And then you also have your largest winning trade. So for the ones that did win, the highest winning trade was 144%, and the largest losing trade is equivalent to our stop loss, which is 15%. And then our average bars in trade is 12. So it's all here. And then we haven't been margin called because we were exercising disciplined risk management and we were very conservative with how much collateral we were using and deploying and allocating to this particular trading strategy. So that's how you look at the performance summary. And then the list of trades basically gives you an idea of every single trade, and you can see it how it matches with the chart. So for example, if I want to look at trade 1 that was open on January 2nd, I can go back all the way to January 2nd and I could see this trade. So for example, if you click this little button, this will take you right to the trade and it tells you an entry long. So it opened the long on January 2nd for $11.28, and then it closed the long 28 days afterwards for $23, and that secured 112%. With no leverage. With leverage, it secured 224%. That's shown in your cumulative profit column. And then your run up during that time was 137% pre-leverage. So in reality, your run up is invariably going to be at least equal to what your profit is or considerably higher, right? So think of it that way. And that's how you can see every single trade from the beginning of time. And it's done a good job. Now, we'll see with version 2, and I'll walk you through that configuration that we found has been helpful. But this is definitely a promising configuration. And then the last tab is the properties tab. So this allows you to be able to see exactly what the trading range is, the backtesting range is, the symbol info. So depending on what type of premium paid plan you have with TradingView, you can click this button. This allows you to actually export the entire trading configuration. So once you have the trading configuration exported, you can configure it, you can distribute that configuration and brainstorm it with others, right? So you can share your settings with others. Another way of doing that is to literally just take a screenshot of your strategy inputs and then send that, right? So that's obviously the easiest way. So another option is the deep backtesting. If you want to be able to go into more granular defined detail, you can do that as well. Now, let's go through version 2. So I want to walk you through Momentum Trading Engine version 2, and I want to change it to 1 day for Binance, and I want to unhide it, and I want to walk you through the results of this because this is significant. So Momentum Trading Engine version 2 is a complete overhaul and upgrade from version 1. And how it works is right now I'm using Solana USDT for 1 day on Binance. using the default settings. And again, all I did to add it is I clicked indicators, invite only, go to Blockcircle Momentum Engine, Trading Engine version 2, click X, and then it'll be added. So that's how it works. And then once you add it, you go to style and then you click quantity and you remove quantity. So just to clean up the chart quite a bit. So what we found is that this trading configuration goes all the way back to 2020, from the beginning of time, since the inception of Solana, all the way until today. And how it's performed is amazing. It's 57,000%. And over the course of 61 trades, this outperforms a buy and hold of 7,000%. So basically you're comparing a 570, and at its peak, it was well over 900. So you're comparing like a 900x return versus a buy and hold return of 70x. And at its peak, the buy and hold return was 11. So it was 110x. So you're talking about 900x versus a 100x, right? So this trading configuration outperforms buying and holding Solana by a multiple of 9x, almost 10x, with no leverage. So this doesn't have any leverage. And it's using position size of 100% in the properties, right? So that's how you can infer leverage from here. And then I always choose percent of equity, but you can choose contracts or just a strict dollar amount, completely up to you. Now, there's some benefits. So think of it as pros and cons. There's some really positive things about the trading configuration in terms of the actual net profit. And I love the fact that it's actually outperformed, for the most part, 99% of the time, buying and holding Solana, except on 2 occasions over the course of trades 12 and 13, it underperformed. As you can see, the green line is performing below the buy and hold of Solana. However, I don't like the fact that the percent profitability is 40, 41. It was a little higher, but it was at 41. It was like 45, 46, maybe 50 at its highest. I would really prefer to have the drawdown a little bit below 40. I would ideally like to have it around 30 and below. But I'm not that concerned about that, because if you go to the performance summary for this and you look at some of the metrics that we were just looking at. So for example, I look at the average trade, it's 31% in profit. Average winning trade is 86%. Average losing trade is only 6%. The largest winning trade was 700%, so a 7x. The largest losing trade was 10% because the stop loss is 10% for this particular trading configuration. And again, do not look at this as a trading bot. This is a fully configurable trading configuration. How I've used it personally and how it's done well for me is that I like to rely on the momentum trading engine to help me with entering trades. And then I like to manage my exit myself using my own risk tolerance and I have my own investment horizon, my own financial goals, and my own ways of determining when I feel a particular position is overstretched and feel like this is probably a good time to aggressively take profit or trail the stop loss and try to lock in those gains as much as possible. So I do that myself. So I don't fully rely on any type of automated robotics solution because I like to have supervisory kind of oversight right over my trades. I like to manage them very closely because I'm trading with large amounts and I don't want to be in a position where I'm relying on a solution to manage my exit when it really just a wick was triggered, right? So in crypto, it's such an incredibly illiquid space that you have price wicks all the time, and they'll wick like 50% from low to high on multiple occasions. So I don't want to be caught with those and have an exit triggered that way. So some trades I'm managing through automated robotics, but some I'm just managing myself. So that's my main point. So I would not rely on a trader or some type of framework or an automated solution to exit. I think everybody has to have their own system and their own plan and their own approach and what works for them, right? So that's why I like this configuration. I love it for those factors. The fact that it's been running for 4 years. I love the fact that it's exceptionally profitable and outperforms the highest performing top 3 crypto coin in the entire sector. The fact that the drawdown was only 40% with no leverage, which is good. When the asset itself had a gigantic 95% plus drawdown. And the average trade is 31%. So to me, it's interesting. To me, it's promising. However, a concern I have with it as well is, and this is hopefully something that we can attack with version 3, is it seems to have some trouble in being able to correctly predict where the momentum is when you're in this choppy, range-bound 300% like zone, where you have, let's say the low is around 10 and the high is around 30. So the range is about 3x, it's 300%. So it's what I would love to do in some future version of the momentum trading engine, maybe it's version 3, is to have the ability to have some type of qualifying condition, right? That allows me to be able to choose how tight does the range have to be for this trading configuration to initiate, right? So it's like, think of it as like a conditional if. So it's like, if the market pricing is moving in a tight range bound of 300%, then behave this way. If it's not behaving that way, then behave in another way, right? Move along this path rather than moving along this path. So think of it as like multiple prongs. So that's how I feel like that would be amazing to have, because that will help us reduce the amount of false positives. That's the intent. Your whole intent is to reduce the number of false positives and ideally reduce the number of false negatives too. Like we want to be able to catch every wave, as many as possible. So like this one, for example, it's a good example. This long that happened in September 30th, it closed a short and then a long was open. And then the long was closed on October 8th to ride it all the way down to October 19th. And then a long was open all the way from basically $20 all the way up to 126%, right? $126. So this was a monster ultra profitable run up. And I like that it didn't have any type of false negatives where we didn't have a situation where the trade was invalidated by a stop loss or invalidated by a take profit or invalidated by one of the other exit conditions. It ran up very, very nicely. So I want to be able to have more of these, and I want to be able to maybe be more aggressive when it's in like chop period. And so let me just draw it out so hopefully this explains it better. So I'm talking about these ranges, right? This range is where you have a high rate of a drop in like the actual win rate, right? A drop in the trade accuracy. And I really would like to come to a point where we have this as a built-in condition to be able to address this challenge, right? Because that's where the majority of some of the unprofitable trades came from, because it correctly called the main shorts. It absolutely nailed them, right? That's 1 short, 2 short, 3 short. It was just perfect. But it should be closing around this time, right? It shouldn't be erasing some of these gains and then closing at a later point. So that's version 2 at a high level performance for this particular trading configuration. Let me walk you through the conditions now. So there's a huge amount. This is going to take quite a bit of time for everyone to wrap their minds around it. So take your time. There's like a transition period, right? But it's the same 4 steps, right? Step 1 is defining your time period. Step 2 is your entry conditions. Step 3 is your exit conditions. And then step 4 is your general parameters and what you want to be able to set if you want to have it long only or short only, and etc. So let's go through it. So step 1, we already went through. Step 2, we did the beginning parts of, a momentum indicator is one condition. Another entry condition is the RSI condition. And the way this works is you choose. So I wrote tooltips for each of these. So we wrote as many as we possibly could that could be helpful without bloating the code and without slowing down the actual processing of the actual engine itself. But you're just saying, do you want to have RSI bounds enabled or not? You say yes. And then what do you want those actual bounds to be, right? What time frame do you want to use for RSI? Do you want to use 1 day, 1 week, 2 weeks? It makes a complete difference. A single parameter value change paints a completely different picture, right? RSI long period, do you want it to be the default of 14? What do you want your range, your long bound to be? 64? What do you want your operator to be? Do you want it to be less than or greater than? And what this means is saying that if the RSI on the 14 day for Solana USDT on the 1 day is less than 64, then that condition is met, right? So that's just one condition. Another condition is that's for longs, but another condition is for shorts. So if the 1 day is for the 14 1 day RSI is greater than the 38, then go short, right? So that condition has been met if you want to be able to go short for that particular time. And then there's also, a secondary operator. So if you can have like a secondary long condition or a secondary short condition. Another indicator is, or another condition is the Heikin-Ashi condition. So rather than using traditional candles, you can also use Heikin-Ashi. And this basically allows you to say, this allows you to enable it. And if you enable it, anytime you change the conditions, it'll also paint a completely different picture. So this is how you're refining and fine-tuning and calibrating the configuration to come up with the right strategy. The whole intent is to come up with a meaningfully and demonstrably profitable trading strategy by fine-tuning the configuration that you see in the inputs to get to a point where you limit drawdown, maximize profitability as much as possible, and maximize your trade accuracy or your win rate, right? Those are like really fundamentally your three main goals, right? And you'll do that just by tinkering with these settings and tinkering with the values, because you'll see how drastic of an impact it has just by changing them on the fly. So if you do want to turn on Heikin-Ashi, you just enable it. Then you say, I want to use candle closes. So rather than using traditional candles, I want to use Heikin-Ashi candle closes. And then another thing is you can use Heikin-Ashi higher highs and lower highs, or Heikin-Ashi higher lows or lower lows, right? You can set all these conditions on or off. And then you can also set a threshold. You can say, I want to use Heikin-Ashi higher timeframes if you want. It's really completely configurable to your needs. And the intent of this was to tailor make it to any strategy that you've always wanted to explore, experimenting and trying to robotically automate. This would allow you to do that. And then another big entry condition is slow stochastic indicator. So whether or not you want to have it enabled, right now for this configuration we do. And then we adjusted the K and D in the smooth K period. So if you're not sure what these conditions are, these indicators are, you can just look them up one by one. But these indicators are very helpful. Some are lagging and some are leading. So the best way of explaining what that is some indicators like a simple moving average are considered lagging, where they react after the data is collected. But then some are leading indicators where they're much more dynamic. So they're much more like oscillating based indicators are considered leading indicators. Because they're trying to infer or predict what the next action is, right? And another entry condition is the open interest. So if you're looking at the total cumulative perpetual futures of these, of Solana in USDT on Binance, Solana USD in BitMEX, and Solana USD in Kraken, Solana USD in BitMEX also, but USDTP. So you could do this in different ways, just by enabling or disabling it. You can have a base currency. So how do you want it to be, right? Do you want it to be BTC, or do you want it to be SOL, or do you want it to be ETH? What open interest are you looking to track, right? And what time period? And this is 3 billion. So what's your threshold in million? Is 3 billion. And the intent of this is very similar to the next condition, which is price level. It was by design, our goal was to try to determine the health of the entire crypto market first. So that's like prerequisite one. It was like determine the overall macro market condition and health of crypto as a whole. The best way to do that is to be able to look at the price history of Bitcoin at that particular time, And then second is also looking at open interest, looking at the futures market, taking that into consideration and seeing, are we heavily overbought or are we heavily oversold? And typically, historically, based upon our own research and our analysis, it shows that when the cumulative open interest for Bitcoin across the major prominent centralized cryptocurrency exchanges is above 3 billion or above 4 billion, the market is severely overbought, severely stretched. And that typically coincides with market cycle peaks, or at least a local top, right? So you can consider those conditions in this one metric, right? Another big one is the price level. So this one is by far the most complicated function, I would say, because what this shows you is, think of it as the bands. So what this is saying is, if the price of Solana on the 100 one-day exponential moving average, so think of it as if the Solana USDT 100 EMA price is above 0.10%, right? Higher than the price itself. So as long as the price of Solana is higher than this band, right, of the 100 EMA by this percentage, then that condition has been met, right? And the whole point of this is to just say that you want to be able to be in a healthy, strong position where the price of Solana is above the 100-day EMA. But you can change this to 10-day EMA if you want to make it more of a short-term strategy, and you can reduce the time period to 12 hours or reduce the time period to 4 hours. And you can see how many more trades are issued now. But by changing that, you'll see that it'll have a measurable impact on the strategy, right? This drops the drawdown all the way to 75%, drops the net profit considerably, and we're no longer outperforming a buy and hold of Solana. And more importantly, we're falling below our starting balance, right? Our prior configuration only fell below our starting balance for like the first 2 trades, and it was very momentary. It was like a temporary blip, right? And if I go back, so that hopefully explains the intent of the price levels, and you can change this in millions of different ways. So you could literally try every combination and permutation of a configuration that you've ever imagined. So if you want to say, I want to look at SMA, or I want to look at like the Hall moving average, right? The HMA, you can do that as well. And you could change the operator to say, I want it to be greater or less than or equal, etc., and change the time period. So if you want to say, I want to only enter if BTC USDT, right, is above the 21-week EMA and is above 0.1% above that, then that would be my trade, right? And that's just an example. It's just an example of what you can do. You can configure it in a million different ways. And then you can have multiple price level conditions for different assets. So that really concludes the entry conditions. So let's look at step 3, which are the exit conditions. So as you can see here, we have our traditional stop loss. We have our target profit. And we have a condition that says exit on opposite signal. So in other words, do you want to exit an open long if you have a short alert that is coming through? Then I have that enabled right now in this configuration. And you can also verify how it would perform if you uncheck it, right? And you can see it has such a significant impact. It has such a significant impact on your profitability. It goes from 57,000% to 2,600%. So that small change has that much of an impact. Another change is you can also do exits on higher time frame. So what you could do is you say, I want to have a trailing stop loss enabled. And that means that the stop loss is going to automatically shift up if you're in an open long, or it's automatically going to shift down if you're in an open short, to be able to try to contain and protect those gains as much as possible. And basically you would trail your stop loss to be above your entry for longs or below your entry for shorts, right? So you're really protecting and capping your downside exposure in the event of the market collapsing. Or spiking in the opposite direction of where you have an open trade. So you could have a trailing stop loss, and then you have it on a higher time frame. So rather than focusing on only the time 1 day, you can say I want to do an open a trailing stop loss on a higher time frame of 3 days rather than 1 day. And you'll see it paints a completely different picture. Just by doing that, you've increased profitability from 55% to 266%, right? So rather than being so incredibly reactive and just so lightning fast in terms of the response to a trailing stop loss being hit and invalidating and closing the trade, why don't you actually try to experiment with using a higher time frame rather than 1 day, use 3 days. So it gives you a little bit more assurance if you want to do that, right? So those are just different ideas that you could do. You could also trail the stop loss using different percentages. So rather than using 0.02, you can use 0.03. You could say, yeah, and then you can change the increments. So how much do you actually want to change the trailing stop loss and by how much, right? And then you could also have your T3 CCI invalidation. So you can basically have your momentum invalidation. So if your momentum is shifting in the opposite direction, then would that invalidate the trade? If you're Heikin-Ashi, if you're in an open long and it's determined that it was a green candle using the Heikin-Ashi methodology, and if it flips the red, then would that invalidate the trade, right? Do you want to invalidate using open interest? So these are some of the indicators that I think would hopefully be helpful. And then the last step, of course, is step 4, which is, do you want to do only longs or only shorts, etc.? Now, I want to show you how to set up the actual alerts. So this is how you do it step by step. So I posted in Blockcircle a post where it explains the Alpha Tool upgrade, so the Momentum Trading Engine version 2, and then upgrading version 1 to be natively compatible with the trade execution services. So at a high level, this is how it works. You basically would set up an alert from TradingView to be sent to a destination, which is a service, which will take the alert and execute the trade on your behalf. And that is as simple as that. But to do the actual step-by-step procedure, there's obviously intricacies and there's complexities to it. But ultimately, I've tried to make this as dead simple as possible. I've done my level best effort to be able to really simplify the process of creating alerts and to have native connection and integration with the most commonly known services, which are 3 commas, Cornix bot, Mizar bot, CoinRule bot, and there's hundreds of other variants as well that others have tested over the course of time. But those are really the main 3 that I've tested, and I don't see why CoinRule also wouldn't work. It uses the same mechanism as the others. But how you set up an alert in TradingView is you right-click any strategy you're looking for, and you say Add Alert, and you click in the dropdown the Momentum Trading Engine version 1 or version 2. So let's say we're doing it for version 2, and you click it. Then you say, instead of alerts function calls only, you can say order fills only. And what this would do, this is the easiest way of doing it, is you then set up your notifications and you say, I want to notify it in the app. I want to receive some form of notification via email. I want to play a sound or send a plain text through to an email as well. Or you can send it to a webhook. So it's completely up to you how you want to have it set up. So right now, for example, how I have it set up for Blockcircle Discord is I basically have it configured where I have my Momentum Trading Engine version 2. So let me select it for 12 hours. And you see I have it set up here. And then I have order fills only. And then in the box itself, so the message box, and this needs to be JSON formatted perfectly. And you'll see, so anytime you check out of it, you see this little green mark. It tells you that it's formatted correctly. And Discord has its own strict syntax that you have to use. Telegram has its own syntax that you have to use as well. Each destination has its own needs. But the easiest way is to not even tinker with this and to just receive an email. Now, receiving an email is fine, or being notified in the app is perfectly fine. You don't need to change any of the actual messages. You just choose what fields you want to include. And how you do that, you just click this little question mark, and then this tells you what variables you want to include in the message. So think of it as if you want to include the exchange name or the ticker, like Solana USDT, or the price or the volume, you would include the field like this, right? This is really the main value that you would include in the message content box. So you could also include all of these. So you can include close, open, high, low. You can include time now. You can include different plots and intervals and currencies and your previous market position. So how I've done it, and I'll show you exactly how it shows up. But if you go to any of the trading alerts that are in the trades channel in the alpha community, you'll see that it says the name of the engine, what configuration it is, what the trade action is. So this is a buy. What was the prior trade position flat, which means that it wasn't in a, it closed the open short and now it's flipping to a long. And then the trade position is a long, right? Which is because you're buying. And then you're using 2x leverage. Trading pair is this, Binance Solana USDT, price is 141, and the time period is 12 hours, which is 720 minutes. So that's how it shows up. But on TradingView, how it shows up is, shows up like I was just showing you, which is here. So this is the variable name. This is the text. Then it's the same thing. It's like variable name, text, variable name, text. So that's how you set up the alert. Now, if you want to automate this, and you're absolutely dead set on making sure that you have this robotically automated, you can use 3 commas. And the easiest way to do that is either setting up multiple DCA bots or using their new function, which is called Signals Bot, and just watching this video. So if you Google 3 commas, Signal Bot, TradingView, it should take you to this view, and this will walk you through step by step exactly how to integrate alerts in TradingView to be sent to 3 commas server via webhook. Webhook is just a transmission mechanism. There's nothing more to it. It's just a way for you to be able to send something to a company in a secured way, right? And that's the absolute basis of it. The way that when 3 commas receives the actual alert, then it would execute the trade, whether or not open a long, close a long, open a short, or close a short. And to do that, again, is once you go through the tutorial, you just go through Momentum Trading Engine. You want to say version 1 or version 2. You click order fills only, and then you type in, the actual message they're going to give you, and that is it. Then you set up their notifications, you paste in the webhook that you need to paste in that they'll give you, and then you're up and running for 3 commas or for Cornix. And it's the same thing with the other videos. So Mizar has its own, and then Cornix also has its own, right? So each trade execution service has its own proprietary process and steps that you have to follow. But ultimately, what I did want to explain is that when you're in this view, this is only going to be limited to one standard message that you're going to be sending. If you want to be more sophisticated and you truly want to be able to be fully compatible with each of these, it's better to use the actual input fields that are in the input. So I'll show you. So if you're using version 1 or version 2, so let's stick to version 1 here, and let's go drag all the way down. See these 4. So for example, if you're trying to automate it on Cornix, it's going to give you 4 UUIDs. So one UUID is, think of it as like a universal unique identifier. They're going to give you an identifier to your particular account. And your account in Cornix or Mizar or in 3 commas is going to be connected to your Binance account or connected to your Kraken account or your KuCoin account or your Coinbase account via APIs. So in each of those centralized exchanges, you're going to be generating API keys, and those keys, you need to make sure, please, that you are not allowing for any withdrawal, right, of that account's balance or the wallets. You are only allowing for trading of that account via the API. And API is a programming interface that allows some other solution to be able to execute trades on your behalf in a robotic, automated way, right? So all of that fund management and so forth is controlled completely by yourself in the main centralized cryptocurrency exchange, and also in unison with the trade execution services, right? So again, think of it this way: at a really high level, you have TradingView, which is step one. That is the main issuer of alerts and a manager of alerts. You have step two, which is your trade execution service, like a 3 commas, Cornix, Mizar. There, they take in the alerts and they manage to actually execute the trade. But that step two needs to be connected to step three, which is your centralized cryptocurrency exchange. And that's where the actual trades are being processed, right? That's where they're actually being executed and transacted on. So let's go back. So how you do that is if you're using, and I explained that in my post, but if you're going and using Cornix, for example, they're going to give you 4 UUIDs. All you need to do is they're going to give you a long entry UUID, a short entry UUID, a long exit UUID, and a short exit UUID, and you would just type them in, what they give you. So each of them are going to give you one, and all you would do is once you have the UUIDs and you've entered them, you click OK, and then right-click, add an alert, go to your Momentum Trading Engine version 1, and then this time click Order Alerts Functions Only. So what this is giving you now is if you just click Notifications and then change the webhook again to obviously send it to Cornix directly, it's now using those 4 input fields that were in the inputs of this trading configuration. So rather than using the autofills like we had that built-in message, now it's using those 4 fields. And then you just click Create. And basically, once that's done, you'll see it on the right-hand side. You'll see an alert. And you'll see it right here. So there it is. And then you have it right here. So that's how it works. And if there are any questions about this, I know this is exceptionally complicated. If you are new to trading, if you are new to quantitative finance, if you're new to algorithmic bots, if you're new into trading engines, this is something that it's like our life's work. This is something that Crypto Hunter and I are very proud of. And it's really taking a lot of the same trading strategies that we've been using for years. And we try to build it into an engine that can modulate different combinations and modulate different permutations of trading strategies that we can just test on the fly and see what's potentially promising. The last thing I really wanted to shed some light on and cover is what the optimal portfolio structure is and how much, could be potentially useful to allocate to the momentum trading engine, right? So for me personally, when I look at portfolios and when someone asks, for if they're over allocated to altcoins or if they've been completely wiped out and now they're deploying fresh cash from the bank directly to the crypto market and they're not sure where to begin, I always explain these 2 main goals that I have here. Goal 1, if you are just starting out or you are not happy with your financial situation, I think it's very important for you to focus on building wealth through high-risk concentrated bets. And what that means is you have to have some exposure to high-risk speculative positions, but you don't want to be in a position where you are way over allocating to those and you're just putting 95% of your portfolio into, rug pulls and speculative meme coins that don't have any actual fundamental value and don't have any intrinsic benefit and really no net positive to the sector, right? So it's important to go through and structure where you want to be able to end up being, right? And what is your ideal target destination? So you have your point of departure and your point of arrival, right? If your point of departure is to truly focus on building wealth, then your strategy is completely different than goal number 2, right? So for goal number 1 or phase 1, you want to be very aggressive in terms of some positions in your portfolio. And then once you've actually built wealth, then it's very important to preserve that wealth through low risk, diversified bets with a balance or a portfolio that's very balanced and managed in a very well-defined way. And you're having assets that are not correlated to each other. So when someone asks, how do I hedge? How do I diversify my positions? How do I not overexpose myself to crypto? The only way to do that is to truly diversify your positions by not investing in assets that are completely directly correlated. So Unfortunately, the inconvenient truth is that Bitcoin and Ethereum are inextricably linked, and they're directly correlated to each other over the long course of time, right? And there are some momentary times where they depeg and they essentially become less correlated than they did historically, but it's usually it's short-lived, right? Over the long periods of time, the crypto sector is more or less correlated to each other, right? And it's important that if you're trying to truly diversify your wealth, then you don't want to have your entire net worth in crypto, right? You have to have some exposure to maybe lower risk equities. And I'm not referring to the ones in like the Russell 2000 or Russell 3000 index. I'm talking about ones that like potentially precious metals, commodities, other assets like real estate. So I'm heavily invested in real estate because to me, it's the perfect hedge and it diversifies my family's portfolio well and sufficiently to allow me to focus as much time as possible on the crypto sector, because to me, it provides the most outsized returns. There is no sector in the world, according to my research and my analysis, that provides more attractive risk-adjusted returns than crypto as a whole, simply because I feel like we are exceptionally early. We are as early as you can possibly be as we are entering crypto. So how to accomplish goal one and what is a proper portfolio? So this depends on how risk averse or aggressive you want to be and what your financial goals and ambitions are. But ultimately, if you want to be aggressive, you can have a 50-50 structure. And I'm only referring to crypto here. Or you can be more conservative and have it 70-30. And what that means is you can have 70% of your portfolio in low to medium risk, just like the four pillars that we talked about. So Bitcoin, Ethereum, Solana, and Doge, right? I mean, each of those are category leaders. So these are anchor projects, I like to call them, right? And then 30% in extremely high risk speculative positions. That's, to me, is considered a more conservative crypto portfolio. I think anybody with any exposure to this sector is willing to take some risk. So to me, that is considered like low to medium risk is 70-30. If you want to be higher risk, then it would definitely be closer to 50%. So 50% in low to medium high risk and 50% in extremely high risk. So profile one, let's say that 50% is low to medium risk. How do you break that out? 25% can be in Sol and 25% can be in the Ethereum Arbitrum ecosystem. So that includes ETH, it includes, ARB and ARB coins, just some exposure to those sectors and having 50% into that. Now, within the 25% Sol, you could also have, and you could break this up into different WEMs. You can have 25% Bitcoin and then 25% in ETH, ARB, Sol. That's completely up to you and that's your prerogative. But if we stick to this profile and we have 25% Sol, 15% of it can just be buy and hold until you feel like the market's stretched and we're nearing a market cycle top. Another way is to also have 10% of the momentum trading engine, and you have 5% in configuration 1 version 1, another one 5% in configuration 1 version 2. So this way is and you can have it 2.5, 2.5, 2.5, 2.5. So you're actually forward testing 4 different configurations. We found promising configurations with Bonk, with Avalanche, so AVAX, BONK, also with GMX. There's other configurations that are potentially promising with Woo, right? So with WOO. So there's different variants of strategies, but the ones for Solana seem to be the most attractive because highly liquid coin, globally accessible, globally available, and liquidity is very important if you're trading large amounts. Like there's people trading with 7 figures with the momentum trading engine, and you're going to experience extreme slippage, right? Even if you're trading with Solana. So it's much better to be able to break that up into smaller positions, but ultimately still be guided by the engine, right? And it's much better to be trading 7 figures on Solana than be trading 7 figures on GMX as an example, right? Which is much more illiquid. So the rest of the portfolio, you could have 2% in 25 extremely high risk positions, right? Or, 5% in 10 speculative high risk positions. But it just depends on what you're looking at. If you're focusing on trying to identify undervalued crypto as early as possible, and the niche that you're really trying to hone in on is microcaps and small caps, so 10 million and below, then it's probably better to not allocate more than 0.5 to 1.5 to 2% maximum in any of those positions. And let's assume that out of those, you start with, 10 of the 25 fail. So those just invariably become rug pulls, soft or hard rug pulls. I define them as a soft rug pull is a developer or a leadership team who essentially grow disinterested in the project and just branch out, and they just become more disassociated as time goes on and nothing gets delivered, right? So the roadmap fails, the promotion and content distribution plans fail, and essentially it becomes a distressed asset, right? That then gets acquired or just dissolves. Then let's assume that 5 of the 25 break even. So you, in fact, just walk away with your 10% and no gain, no loss. We don't want that, but that's better than actually the alternative, which would be losing everything, right? Then you have, let's say on average, you have 10 trades that on average net 5x, so 500%. And you're doing those 10 trades times 2% times 500%. So you've essentially near doubled your entire portfolio balance of starting of $1,000 or 10,000. You've gone to close to 18,000, right? So it's important because you have to also account for the loss, right? That you did for the initial 10 projects that you put 2% in each. So in the end, you're still walking away with, 18,000 if you're starting with a balance of 10,000. And to me, that's just, I think this is hopefully helpful in being able to keep the perspective in mind. Another thing that I think would be very helpful is you should always have some type of formula that you're using for how you're calculating maximum loss and how much you are willing to tolerate. And that should always take into consideration your leverage ratio, your funding rate, your stop loss, your entry price, and some type of threshold window. And that threshold window is centralized exchanges like Binance, when they give you the ability to have access to 2x or 3x leverage, they're not actually giving you access to double or triple your position size by as much as you think. They always devalue the leverage and they adjust it down from a marginal rate to an effective rate. So rather than getting 2x, you're actually getting close to 1.86x, right? Or rather than getting 3x, you're getting close to 2.8 or 2.79x, right? Depending. So each exchange has different rules. It's just very important to remember because your goal is to never get liquidated. You should never be in a position where you are going to get liquidated. And what that means is that if there's a margin call, so if you're in an open long for Ethereum, you buy Ethereum at $3,000 and you're buying it at 2x leverage, and it tells you exactly what your liquidation price is. And let's say the liquidation price is 2,500, and then the market collapses and crashes. You still have the leverage long open at 2x leverage. The price collapses right below 2,500. Even right there, you've been margin called, your position's been liquidated, it taps into your collateral, you've lost your entire position. But even worse is that, in fact, Binance, if you read the fine print and the terms and conditions, they can go and effectively proactively close any position that's at risk of being liquidated ahead of it being liquidated. And that's what this threshold window is referring to. So they can literally go and preemptively close your position at like 2,600, 2,650. If they deemed and determined using their own process that your position is high risk and they don't want to hold on and they don't want to be absorbing that risk anymore, because there's obviously a counterparty risk that has to be considered, right? They're also going to have to fund both positions on both sides. They themselves are glorified market makers, so they don't want to be in a position where everyone is being liquidated. So because then everyone's going to run away. It might benefit them in the short term, but then it's gonna really frustrate everyone to the point where they won't use their platform anymore. So it's very important to remember that you have to remember the threshold window. That's all. Another very important thing that I walked through before, but I'll repeat it again, is when you're looking at the total transaction cost, just remember that you have to consider your entry price, your price slippage, your transaction fees, and your funding rate. If you don't know what the price slippage is, what you can do is this is what you can do. You can just type in CoinGecko and then type in Bitcoin and go into the markets, for example, and look at the plus or minus 2% depth. And what this means is that right now on Gate, for example, you can buy $12 million of Bitcoin before it moves up by 2%, or you can sell $12 million until Bitcoin's price in USDT terms denominated in this equation, right? So think of it as X divided by Y. It's literally as simple as that. You can dump 12 million and only bring the price down 2%. Now, if you want to be able to look at the actual order book depth, then you would need to actually log in and look at the centralized exchange and look at the order book depth. And you can do that just by, this is BitGet, for example, and you can go to order book. And then this allows you to be able to see the exact order book, right, in this format. And then you could also have access to some of the more recent trades. And this really, I think, gives you a good idea of what we're looking at here, right? And then there's different variability here with the when you're talking about like isolated 10x or cross X, or you're going to allow for exchanges that allow you to be able to use like cross collateral. So it's going to collateralize your position using other assets that are in your wallet that may or may not even be stable coins, or may not even be Bitcoin or ETH as an example. So it just depends on what exchange you're using and what you need to look for. So hopefully that's helpful. Again, we've covered quite a bit of material here. So just if there's any questions at all, please let me know. We've tried doing our best to include as much as we can in the actual Blockcircle Learn course. And I hope everyone's been finding it helpful. It's on learn.blockcircle.com. All you do is log in using your normal credentials. And then once you have your normal credentials, you log in and you can access, you just click register now once you're logged in, and it'll say you were enrolled in this course. And then you go in and you click any of the lessons. So for example, Crypto Hunter went and recorded an entire session on Fibonacci levels and retracements. It's excellent. And you just access the actual tutorial this way. So you could access everything here. And then this will give you the main concepts of what you'll learn, and then the main content chapters. And then right after, we have a quiz. So you can do a quiz on every single topic. And that will really, force you to test your knowledge. So what I will do is I will add, this lesson will be a separate lesson in the course, and you'll see it here as well. So we'll continue to grow and hopefully keep bringing value and hopefully help everyone. Thank you so much. Hope you found it helpful.